Greetings, market rebels. Welcome to this week's sector situation. It is meant for Sunday, May 26, 2024, but we're actually recording here late on Friday, the 24th, just because we do have the Memorial Day holiday weekend, and that really prompts the thank you to all of those who have sacrificed on our behalf to make this possible. I covered that probably for quite a while in macro measure, but now we're in sector situation here, and really this is going to be a little bit of a review. Hate to say it that way, but I did kind of had to delve into this in the macro measure because I think it's intertwined. Intellectual property rights notice. After we flash our trusted disclaimer, here's the very brief macro measure slide for the week, just to keep things in check. But I'm leaving a lot of that off the table. I've got a lot happening this weekend in terms of family visiting and all kinds of other stuff going on. So I'm trying to get this taken care of, and I will update things if we do need to on Monday, because things could happen. So before we get rolling into next week's trading, if anything really significant develops, we will get back at it and get some videos, or at least one video recorded as a result. So on that, I'm going to briefly stop the share, get my desktop cleaned up a little bit, get rid of the PowerPoints here, and hopefully that'll free up everything. And then we can look at my main grid of 12, which should be on screen 4. And I think that's it. And I did have to go into this in macro measure, so we're kind of picking it up, honestly, from there. But I would just say, look, you can quickly survey this. That's why I have it set up this way. It might be tough on a smaller screen, but you could see that a lot of sectors struggled this week. So though we did make new highs in the major index ETFs and SPY and QQQ, and SMH, of course, closed at an all-time high after making a new, I think, all-time high yesterday, but didn't quite get back there, but got pretty close. So the semis are all roaring and overall, right? And they're doing fine. And they are the leader, and that's great. And that's kept probably XLK, XLC humming. They're fine as well. But as for everything else, they all pretty much leave something to be desired, with some leaving a lot to be desired. And I'd say the first one that leaves a lot for me is XTN. And we've been looking at this along with IWM as our canaries. And this had a really rough week. They did kind of improve things a little bit today from yesterday, but and maybe this is a double bottom in there that will end up producing a bounce, and that would be a good sign, I think. But I just don't like the fact that the transports are sitting it out, and they just do not have a good profile on the charts, if you ask me. Again, it could be a double bottom here, but if you look at that profile overall, you have a lower high put in, and you're at risk of a lower low, more so than a new high, or right, a highest high. So it leaves a lot to be desired. And along with IWM, discretionary is not behaving well. It's got a similar chart. You can see that. That is not a good sign, right? That your consumer stocks are in rollover mode after putting in, right, a lower high, and they were not able to get back anywhere near really the highs that we saw earlier this year. Even staples, which were kind of acting immune to it all, they had a rough week. So they came in after those as well. The Dow had a rough week. We showed that in macro measure. Healthcare, rough week. Real estate, rough week. Financials, which have been really like a juggernaut, except for this one corrective phase of significance. They've been a juggernaut for a very long time, much like the market. They had a rough week. Energy had a rough week. A lot of things have had rough weeks, and even these other stalwarts like like XLB and XLI. Not a good look. You go up towards the high, and then you start to almost sniff it a little bit, and then you start rolling over. So this could just be part of the journey on the way to new all-time highs. I don't want to act as if it's the end of all things, but this is certainly not a good look. If you compare this to last week we really ended up, I think, looking quite good overall, right? It was still, we were kind of saying like there's still something out there, kind of feel like something's missing. I kind of hinted at that with Mark Lopresti a few weeks ago, back on macro measure. I'm sorry, back in the cocktail hour, and I did discuss that in macro measure, I believe. And so I'm not really tooting my horn or anything, but just the way I've been feeling, like, this seems like there's a missing element here. It's just not as robust as you'd like. They're not finishing things as strongly as you'd like. And as we mentioned in this week's macro measure video, breadth really took a hit this week. It really, a lot of things that look quite good on a breadth basis. Not everything. I don't ever go through all the screens on that. There's too much stuff, but the basic screen we usually check out, just not a good week for market breadth. So you have things that are important like XTN and the small caps and IWM not doing well. You've got XLF, which had been going gangbusters, right? That had a rough week. So your financials are having a rough week. Energy has a rough week after trying to, basically doing a false breakout maneuver, and it's at risk of losing an important level here at near 91. So that's in the form of the XLE. So this is just concerning at the very least, I think. You have to be concerned about it. It looks like the rate cuts are being pushed back even further, which has been the case. Powell, to me, almost seems like he sent his minions out to sort of walk things back a little bit with what I heard this week. And like I said in the macro measure video, that's why I'm not a professional Fed reader, and why I try to rely on the charts. But certainly, right, the market did not take what emanated from Fed speakers this week very well, and some macro geopolitical type stuff also seemed to intrude. So a lot of the things that have been there on the back burner kind of ignored, which is very common. They started to sort of seep into the market and get a little bit of a reaction out of it. It could just be a temporary thing. Semis could keep leading. That could keep the XLK intact, and that could be the leaders leading. And so they're buying, they're buying the Qs, and the Qs continue to do well. And the SPYs and Qs are fairly well correlated. So I would think the SPYs would probably continue to tag along for the bullish ride if there is to be more. But I think if you look at just this grid of 12, this is not really looking that wonderful right now. And I think real estate really had a rough week too, right? So let's take a look at a larger chart of XHB kind of in that IYR. I think I may have put, it was kind of a busy week. And I think I may have put some stuff in related to this. It could have been other ETFs though, but IYR, there's your real estate ETF, not looking good. It's very much in line with the XLRE. You're at near the 200 here in purple, and you roll over beneath there, right? You've got a lower high put in. You were looking good. You were above all SMAs, and suddenly, right, you find yourself back below them, and maybe you're plumbing that intermediate low there, and that's a concern, right? This to me is a very big concern that's being ignored, just like the banking issues are largely being ignored. There's been banking issues. There's things that have cropped up. People have produced some posts on it that we've caught, and it's just not all well there. But the gang's going to gang. They're just going to do what they do. But look, you've got a possible lower high put in here. You lost the 50 and the 20. Now you're trying to get back above it as of today in terms of Friday's action here. Now that the market's closed, we have to wait and see. And it very well could right the ship. I'm not saying it won't, but if it doesn't, and then you're looking at testing this 100, that's a problem, right? So home builders could become an issue. And that's something that's very important in my mind, because so much of the economy is driven by the consumer, not naturally. And so much of that is real estate related, and real estate related purchases and things like that. So that would be a rough sign if that were to roll over, and it's at risk of doing it. Like I said, below the 100s, things start to get dicey there. So that's the dash 100. I'm sorry, the dash white line, excuse me. And Thinkorswim's got me right back again with percentages. It keeps doing this to me. So let's get rid of that. So there we have that. Let's take a look at what else. I think it was ITB that I had. I think maybe it was ITB that I got it done. Yep, home construction. So I put an idea in on this. I can't tell which day, but you can see it, right? This is now below what was acting as support, and this could convert, some of these SMAs could convert to resistance and keep this thing struggling. That's what can happen. So we're on the other side of them. You can see how they supported them on the way up. It's exactly the opposite, obviously similar, but just to the downside. So that's looking a little concerning. We already noted that another important area is already concerning. XL, that's transports. They're holding that low from about a month ago, but they're not too far away from it. They could be in trouble quickly. You've got XLF. It did hold on the 50 on Thursday. You can see it touched it practically perfectly on Thursday, holding above as of now. So everything's okay. You're above the 20 there too in light blue. But again, this is also near a danger zone. And again, another important sector. So the XLE is too, it also is important. These are the ones in my mind that are just important, that you really want to see these behaving very well in a bull market, and they're not now. And this is making a new low, and it's threatening to break support here at near 91-ish. So this could be on its way down towards lower levels and maybe using those SMAs, the longer term SMAs, to find support. It wouldn't be the end of the world. It's just that, look, that's bad. I mean, it's just not a good sign. And the just having noted that, right, that some geopolitical developments out there, we're not good this week, and there's potential for things to flare up even more. These are just not, again, not good signs. So I think this is really at risk, and I'm a little disappointed in this because we had some good trades in there, and I was looking for maybe a nice corrective phase to run its course. Kind of stayed away from it to a great extent for a while. We didn't really put a lot of bullish ideas in, and then I was hoping for that resumption, get another leg out of it. It would also be, in my mind, it would be rough on the consumer in terms of gasoline prices, all that, more than likely. But at the same time, it would be a good sign that maybe global and especially domestic demand is starting to pick up and things were getting on better footing. But now you have to get more concerned. So it's a real flip-flop from last week in terms of market breadth and how the sectors have really performed. And it could just be a little volatility thrown our way, like I said, in macro measure. It could be that they decided that, again, the skeleton being the economic calendar, hey, it's time to go ahead and, get a nice little corrective phase going, a little pullback going. We got through the NVIDIA release, and now we're good to go. In terms of that, because we waited for that to allow some weakness to happen, but we know that the spies and Qs held on. It's just that a lot of other things are looking bad. Even something like healthcare, right? That's got a lower high put in now versus a couple of months back, right? So there's a lower high there. We know there's lower highs in XTN. You might have a similar but lower high even in XLC, which has been another juggernaut, right? So that's not really what you want to see. You did not break out there yet, despite what the major index ETFs did. Could still do it, I'm just saying, but as of right now, the jury's still out, and the fact that it hasn't done it isn't a good thing. You would rather see, as much get pulled along as possible. And this former leader, it kind of looks like it's really had a strong run, and it looks like it is a little bit at risk. Now, it did have a good close, a good bounce back. I do think a ton of money flowed back into stocks today. So that is also a potentially good sign. So again, it's kind of like a balancing act. We don't want to draw too many conclusions or too strong of conclusions from just one really rough session, but overall, you got to call it as you see it. And the way I see it is that this is far from the picture perfect behavior you would want out of the market, as if you really think it's about to embark on a whole nother leg higher, which again, it still could. It's just that it's not acting great. It could certainly be acting better. XLK, right there, you have a really rough candle after making a new all-time high. You are holding above former resistance, maybe converting it to support. You're right on the 10-day in the rising white line right now. So everything's okay. It's just that you could be in trouble quickly if that doesn't hold. You basically have a false breakout on your hands. So that's all that. That's really the big news, I think, from all this right now. And I think what we'll do is we'll probably have to go into more if it's warranted. But I really want to see more data before I start to read too much into things. I did cover a lot of things also in macro measures. So if you watch both, you'll pretty much get it. But I think you just, again, like XLI, we could keep doing the same thing over and over again. But a lot of things are just either with lower highs or they just failed to break out and they're getting near danger zones. So in my mind, the sector situation is that you've got to start taking the risk more seriously until they move this back up away from some of these dangerous areas and they sort of arrest some of these dangerous patterns that might be forming lower highs, that might be forming false breakouts, that might be forming. And if they don't, we could really get some corrective activity. So we'll see what happens. I do want to wish everyone a wonderful, safe holiday weekend. I want to thank everyone that made that possible for all of us. And I will be back at it on Monday if need be. Everyone have a great weekend and a great trading week ahead. Thanks for tuning in.